Good day, everyone. My name is Eng Yenge. Today, I'm going to present my research paper of Management Study ATU 397. My research title is Company Performance Visualization. Nowadays, most successful companies focus their effort in area where they have built their distinctive capability, strength that set them apart from competitors everyone else. To make sound strategic growth decisions, company must establish an effective company performance analysis model that includes key performance indicators that are highly related to the company's value. Besides that, in the world of rich data, data visualization tools and technology are essential to analyze massive amount of knowledge, information, and make data-driven decisions. Followed by my research objective is to predict the company performance, analyze the financial performance of 53 companies from 5 sectors by using visualization ways and develop an effective performance analysis model. Here we have three main objectives. First one is to understand how company performance can be supported by visualization technique in construction, energy, property, technology sector. To understand which data and the determinants of company is highly related with their overall performance. To analyze the suitability of different visualization techniques. And my research question is to achieve the purpose of research objective. A few research questions have been developed as follows. First one is, how can company financial performance displayed by using visualization technique? How to make big or massive data and information into simplest way to understand. And the third one is, does visualization help to improve the company performance analysis? For the research model, dependent variable is economic value added. The short form is EVA. EVA is an index of performance measurement that calculates the method that leads into increase the value or eliminate it correctly. And the independence variable are including 7 financial variables, which are current ratio, return on equity, profit margin, debt to equity, earnings per share, dividend yields, and price to earnings ratio over growth rate. They are used to predict the financial performance of company. This study has constructed the hypothesis. The new hypothesis is the model fit between company performance and financial ratio at a level of significance which is less than 0.05. This study used different statistical tests offered by the instrument of the SPSS software. Next is my research methodology. The data collection in this study consists of 55 companies from sector construction, energy, property, industrial, and technology listed in Malaysian main market. The data from the companies were collected from the period of 2015 to 2019. All data and information of the company is collected from Bursa Malaysia. The ratio analysis used in this study as a quantitative method of gaining insight into a company liquidity, operational efficiency, and profitability by studying its financial statement. There are several ratios chosen as key performance indicator, which is current ratio, return on equity, profit margin, debt to equity, earnings per share, dividend yield, and price to earning ratio over growth rate. And the third one is regression analysis. Regression analysis is a reliable method of identifying which variables have impact on overall performance of a companies and help in understanding cause-effect relationship between measurement objects. And for the instrument used in this study included Microsoft Excel, Power BI, and software SPSS. Power BI is an effective visualization tool and is used to make interactive visualization and report. The relevant financial information was inserted into an Excel program to calculate the results of financial ratio, which represent the percent of each of the study independent variables. The inclusion of financial ratio extract by the Excel program to the SPSS statistical software to measure the effect of the independent variables in the prediction of the financial performance of the company. The research findings, there are 7 ratios calculated for the companies in 5 different sectors. They are displayed on the graph to make comparison between the industrial and evaluate financial performance of the company. In the construction sector, industry average current ratio is 1.97. This graph shows that the HSLs and Kerjaya have higher current ratio compared to their peer group, indicating that management may not be using their assets efficiently. For the ratio of return on equity, the industry average in the construction sector is 8.8%. The company Avcon has the highest return on equity among these competitors. And this graph has shown that the Gamuda has the highest ratio of profit margin, 22.5%, and followed by Kejaya with 14.5% and HSL company with 10.2% profit margin. Moreover, the industry average of debt to equity in the construction sector is 65% or 0.65 in numbers. Presbyterian and Puri have a higher ratio of debt to equity than industrial average. The higher the ratio, the greater the risk of the creditors are assuming. The industrial average of earnings per share in the construction sector is 0.12. From the graph displayed that the Gamuda DKLS Presbyterian has a higher ratio than the industry average ratio. Gamuda possesses the highest earnings per share, which indicates Gamuda is more valuable among these companies. For dividend yield, Presbyterian has the highest average for dividend yield among these competitors over this 5 years period. In addition, the industry average of PEG in the construction sector is negative 0.7. As a general rule, a PEG ratio of 1 represents correlationship between the company's market values and its projected earnings growth. From the results shown, we can know that the Avcon has the ratio PEG 1.1, which means it has the closer to a perfect correlationship. The result of regression analysis show that this model fit between financial ratios and company performance can be accepted at a level of significance. Besides that, it also shows the beta correlationship. The profit margin has the highest correlation with a beta 1.546 and followed by the earnings per share, return on equity, debt to equity, dividend yields, and PEG. The least correlation is the current ratio 0.017. Thus, it also proved that current ratios, return on equity, profit margin, EPS, and dividend yield have positive correlation to EVA, which is company performance, while the ratios debt to equity and PEG ratio have negative correlation to EVA. Thus, it can conclude that the ranking of the companies in the construction sector as shown in table. Kerjaya has the best performance among these competitors, and followed by HSL, Gamuda, TKSL, Faja, Avcon, Crespin, and Brookly. The result of ratio analysis of the next sector is energy sector. In the energy sector, industrial average of current ratio in the energy sector is 1.8. From the results shown, we can know that the Dayang, Icon, and Waisheng have a lower current ratio below 1, meaning that they don't have enough liquid asset to cover its short-term reliability. The industry average of return on equity in the energy sector is 0%, which is lower than other sectors. Yinsen and Petron have a higher ratio of return on equity, which can be considered. They have a better management ability to generate income from the equity available to it over this 5 years period. Moreover, the industry average of profit margin in the energy sector is 2%. From the results shown, Brilliant and Instant have a higher profit margin among these competitors, which is 25.78% and 33.48%. In addition, the industry average of earnings per share in the sector is 0.06. From the graph shown, we can know that the Petron possesses the highest earnings per share, while Icon has the lowest ratio, which means that Icon has negative earnings or it lose money. For the price to earnings over 5 years growth rate, ratio less than 1 is considered good. Based on the graph, we can know that the SRB has the closer PEG ratio to 1.0, which is 0.9. From the ratio analysis, we can conclude that the ranking of the company's performance in the energy sector as shown in table. The first one is Petron, followed by Yinsen, Brent, Dalot, Hibiscus, SRP, Irian, Benelec, Caribbean, Huaan, Dayang, Waisheng, Parakan, Honda, Quarter, Energy, Sabra Energy, and Icon. In the industrial sector, the industrial average of the current ratio is 2.6. The graph shows that the Asia has the highest current ratio, which is 4.67. When the current ratio is too high, means that the company may not efficiently use its current asset or is not managing its working capital properly. Besides that, industry average of return on equity in the industrial sector is 6%. The graph shows Econ Berhad has the highest ratio, which is 24%, while the CPIP, Chinhin, and Econ Berhad have a rising return on equity. Means that the company are increasing profit generation without needing as much capital. For the financial variable profit margin, the industry average of profit margin is 4%, and the CPIP has the highest profit margin among these competitors, which is 13%, while Asia Flight, AEM, and ATU Maju have a negative profit margin, which means that the total revenue exit is less than its overall expenses. Furthermore, industrial average of debt to equity in the industrial sector is 57% or 0.57. From the data result displayed in the graph, we can know that Econvest has the highest ratio, which is 2.28. Next, the industry average of earnings per share is 0.05. From the result display show that Can1 has the highest earnings per share, which indicates that it's more valuable, while ATU Maju has the lower and the negative ratio among these competitors. In addition, the industry average of dividend yield in the industrial sector is 1.4%. From the result shown, Asia Fly has the highest average of the dividend yield among these competitors, while AEM, Afujiya, Aftumajo, and PTM has no dividend yield. From the research result, it can conclude that the ranking of the company's performance in the industrial sector as shown in this table. The first place taken by Econ Berhad, and the second place is EPIP. The third is Ecovest, and followed by Ajiya, Can1, Asia Fly, ATU Maju, Afujiya, PTA, AEM, and Chinhin. Next sector is property sector. Industrial average of return on equity in the property sector is 6%. Based on the figure, show that the Huayang have the highest return on equity, while CHSB has negative return on equity, which means that CHBB may face a financial loss. Besides that, the industry average of profit margin in the property sector is 10%. From the result shown, IGBB has the highest average profit margin over 5 years period, which is 29.04%. It's considered as good and high. Debt to equity in the property sector is 52%, so 0.52. Womack and Huayang have a closer relation to the industry average, which is 0.5 and 0.58. It's considered safe, while SCME has a lower ratio of debt to equity, means that the company is overlying on equity to finance its business, which can be costly and inefficient. Moreover, the industry average of earnings per share for the property sector is 0.07, and the IGBB has the highest earning per share, which is 0.21. Therefore, from the research finding, can conclude that the ranking of the company's performance in the property sector as follows. The first three is the company IGBB, ACME, Huayang, and followed by Gromac, Ecofis, DHSB, DBGD, and BCB. In technology sector, the industrial average of return on equity in the technology sector is 15%, which is higher when compared to other sectors. From the result displayed, also has the highest ratio of Return on equity, which is 30% among these competitors, and followed by Inari and Capnet, which show that it's more successful in generating profit internally. The industrial average of profit margin in the technology sector is 18%. The results show that Alsoft has the highest profit margin among these competitors, which is 49%. It shows that they are more efficient at converting sales into actual profit over this 5 years period. Earning per share is 0.11. From the result displayed, KESM has the highest earning per share when compared to the peer group. It means that KESM is more valuable, while MLS and Jeff Technology have the lower negative ratios among these competitors. Therefore, from the research finding can conclude that the ranking of the company's performance in technology sector as shown in this table. My research finding also included KPI Dashboard. A KPI dashboard displays key performance indicators to provide the executive with an easily discernible view of business performance of an organization. 4 companies have been selected to create their KPI dashboard for 2019. They are Inari from technology sector, BCP from the property sector, Petron from the energy sectors, and Qingping from the industrial sector. In Inari, data and performance on KPI dashboard show that Inari hasn't hit their target revenue, a decrease of profit margin in 2019. Return on equity ratio has a decreasing trend from 2017 to 2019. It's a sign for Inari to improve the efficiency of the companies to create profit and increase shareholder value. The lows or decreasing debt to equity ratio of Inari indicates that a lower amount of financing by debt via lender versus finding through equity via shareholder. All in all, the performance of the company over this 5 years period is determined by combining all the score of each financial ratio from year 2015 until 2019. After that, an optimal overall ranking of company is generated by using ratio, regression analysis, and visualization. From visualization of the financial performance analysis, it shows that the company Kerjaya, Petron, Econ Berhad, IGBB, and Alsoft has the best performance when compared to other competitors and industrial average from the group, gas sector respectively. In summary, ratio and regression analysis is able to rank the financial performance of company in sector of construction, energy, industrial, properties, and technology. Visualization is able to improve understanding towards the data and ratio effectively rather than the text. That's all for my present. Thank you.